Hello, my dear friends. As you are going to appear for the examination, I thought of giving this Super 60 for your examination purpose, where you can revise all 60 points, which is very important for examination in less than 1 hour. So, where it is colorfully highlighted. So, 1 hour revision for examination. So, it is fully colory highlighted for your easy understanding and reference purpose. So let us straight away go to the concept today. So the very purpose of giving this information to the students is to make sure that you are going to appear for examination with lot of confidence, and where you can get more marks. Now let us, without wasting much time, let us straight away go to the Super 60. Now point number 1. An audit is a systematic and independent examination of financial information of an entity, whether profit-oriented entities or not profit-oriented entities, irrespective of its size or legal form, when examination is conducted with a view to express an opinion on financial statements. So, systematic means using standards auditing. Independence means without depending upon anybody. So, the key point for examination is standards auditing applicable to all types of entities, whether profit-oriented entities or not profit-oriented entities. Standards auditing applicable to all kinds of organizations and all sizes of organization, whether small size, medium size, large size organizations. Legal form, standards are applicable to all kinds of organizations, whether it is a partnership firm or a proprietorship firm, or whenever you are doing tax audit, when you are going for the company audit, when you are going for LLP audits. So for every organization, systematicness is applicable. So examination question may be tested here. Then an audit provides assurance, which means confidence to the users of financial statements. When I say this point, what is the point to remember for examination? Audit will not provide any guarantee. Then comes to third point. The basic purpose of doing an audit is to express an opinion on financial statements, no other purpose. The independent audit of financial statement provides only reasonable assurance. So it is to be differentiated from the absolute assurance or complete assurance, which means 100% assurance. So examination question will be tested, and an audit will be provided only reasonable assurance but not absolute assurance. So reasonable assurance itself is the high level of assurance. Then assurance engagements consist of 5 elements, which is 3-party relationship. So what is 3-party relationship here? Examination question may be tested. Auditor is one party, management is other party, users are third parties. So 3-party relationship: auditor, management and users. So management provide information to auditor, users will depend upon the auditor. Then appropriate subject matter, so where there is going to financial statements, then there is a criteria, then sufficient appropriate evidence, then written assurance. So this is the 5 elements of assurance engagements. Then comes to the next point, planning. Audit planning is not a discrete phase, examination question, which is nothing but it is not a separate phase of an audit, but rather a continual and iterative process. So which means a audit planning is nothing but a repetitive process, it is not a constant process. One more examination question may be tested. The audit plan is more detailed than overall strategy. So which is more detailed? Plan is more detailed. An audit strategy sets scope, timing and direction of audit. So audit strategy will set up, so what is the scope of the audit, then what is the timing of the audit, then what is the direction of the audit. The establishment of overall audit strategy and detailed audit plan are not necessarily discrete or sequential process, but closely interrelated to each other. So planning may change in planning may lead to change in strategy, change in strategy may lead to change in plan. Then comes to audit risk. Audit risk means the risk of giving an inappropriate opinion on financial statements when financial statements are materially misstated. So financial statements are materially misstated, auditor is stating that it is not materially misstated. So audit risk can be as follows. Audit risk is equal to inherent risk, control risk and detection risk. So for the inherent risk and control risk, that is called internal control risk, and the risk Before introduction of controls, the management is held responsible. For the detection risk, auditor is held responsible. And then comes to the, for entire audit risk, who is responsible? One more examination question. So audit risk management plus auditor responsible. Why? Management responsible for inherent risk plus control risk. Auditor responsible for detection risk. Then assessment of risk is a matter of professional judgment. So there is no particular precise measurement for measuring of the risk. So it is based on the skill and competence of the auditor. So in order to ensure the risk parameter. Then comes what is the material misstatement. Material misstatement is nothing but, so name itself indicates material means significant. Misstatement means errors and frauds. So misstatement including omissions are considered as a material. So anything omitted in the financial statements can be considered as significant when they may be individually, that means one transaction, or aggregate or multiple transactions reasonably expected to influence the financial decisions of the users of financial statements. The important point to be noted here is any omissions either individually or aggregate which influences economic decisions of users of financial statements are called as material misstatement. If it is not influencing the economic decisions, then it is not a material misstatement. Then comes to the another point. Audit evidence may be defined as information. Evidence means information used by the auditor to reach the conclusions. Audit evidence is nothing but an information which is used by the auditor to reach the conclusions and to express opinion on financial statements. So nothing but audit evidence is the base for opinion. The quality of audit evidence may be affected by relevance and reliability of the information. So one more examination question may be tested. How the quality of the evidence may be affected? It may be based on reliability, it may be based on reliance. Relevance. Then comes to the next point. Auditor has to obtain sufficient appropriate audit evidence to draw the reasonable conclusion on financial statements. Examination question may be tested. What is the meaning of sufficiency? Sufficiency means quantity of evidence. Appropriateness means quality of evidence. Then comes to the test of controls, which is nothing but internal control system of the companies. Test of controls may be defined as audit procedures which are designed by the auditor to evaluate operating effectiveness of the controls which are preventing or detecting and correcting the material misstatements at the assertion level. So auditor is going to test the controls of the organization which have been designed by the auditor. So that is called test of procedures. So in order to ensure that whether the controls are preventing and detecting and correcting the misstatements or not correcting the misstatements, auditor has to ensure. Then comes to substantive procedures. Market is important for, all are important for examination. So these are much more important for examination. Substantive procedures may be defined as audit procedures which are designed to detect the material misstatements at the assertion level. Assertion level means at the balance sheet level and financial statement level. These comprise of test of details. Then analytical procedures. What is the meaning of test of details? Test of details can be called as test of transactions, nothing but profit and loss on items. Then test of balances, nothing but balance sheet items. So substantive procedures may be defined as audit procedures designed to detect the material misstatements at the assertion level, assertion level, assertion level. These comprise of the test of details. So test of details again two types, test of transactions and test of balances, then analytical procedures. Assertion means it is an implicit explicit representation by the management. So assertion refers to representation by the management which is implicit or explicit that are embedded in the financial statements which is used by the auditor to consider different types of potential misstatement that may occur. So you need to remember for examination, assertion means management point of view, you need to understand this point. Assertion means management certifications or management representations, so implied and explicit. Then comes to audit sampling. Audit sampling is nothing but application of the audit procedures to less than 100% of the population. Population means transactions. Population means transactions. So it is not possible for the auditor to examine 100% transactions, hence audit is going to apply the sampling. So 100% means complete audit, less than 100% means sampling audit. Then comes to standard number 501, audit evidence specific consideration for selected items. So 501 talks about 3 select items. One is inventory, then litigations and claims, then segment information. You need to remember these 3 important points for examination. SCA 501 audit evidence specific consideration for select items talks about 3 areas auditor has to consider specially, that is inventory point, litigations and claims point, and segment information point. Then comes to analytical procedures. Analytical procedures means evaluation of financial information through analysis of plausible means reasonable or probable relationship between financial versus non-financial data. Very easy to remember. So analytical procedures is equal to, it is a plausible relationship between financial versus non-financial data. So example, financial means salaries, non-financial means number of employees. So both are reasonable to compare. Then comes to audit procedures. We have 7 audit procedures, very important for examination. So number 1 is about inquiry, which means asking questions. So these procedures will be used by the auditor in order to get the information from the management. Then comes to external confirmations. So then comes to point number 3, inspection. Then comes to observation of the data and observation of the various items in the companies. Then comes to point number 5, recalculation. Point number 6, reperformance. Point number 7, analytical procedures. So inspection repeated 2 times, hence I consider as a 1 point. So 7 audit procedures. Audit procedures nothing but procedures used by the auditor in order to get the information from the management or third parties. So 1 point is inquiry, which means the questions. Then confirmation, third party confirmations. Inspection means inspection of documents, inspection of assets, physically going and examining. Then observation by the auditor. So then recalculation of interest, recalculation of the depreciation, whatever already calculated by management, so that I can get the variations. Reperformance, reperforming the physical counting of inventory, reperforming the fixed assets verification, which is already done by the management as a part of his routine work. Then analytical procedures, nothing but comparison of data to obtain the valuable information where there is a lot of differences. Then comes to point number 23, assertion types. So balance sheet we have 6 assertion types, and profit and loss we have 5 assertion types. Assertion means implicit, explicit representation by the management. So number 1 is existence of the assets and existence of the fixed assets, property, plant and equipments. In case of profit and loss, instead of existence we call it as a occurrence of the transactions. Then completeness, all transactions are 100% recorded. Here also all transactions 100% recorded. It is about profit and loss, it is about balance sheet. Then cutoff, as on 31st March of the particular financial year, transactions have been recorded. So next year transaction not recorded in previous year transaction recorded next year. Rights and obligation, nothing but assets and liabilities are the rights and obligations of the companies. There is no question of rights and obligation in case of profit and loss statement. Valuation of the assets as per the various methods used by the management. So in case of profit and loss we call it as a measurement of the transactions. Then presentation disclosed as per schedule number 3, either in case of the balance sheet or in case of the profit and loss, schedule number 3 is applicable for both. So these are the various assertions which are applicable to the, as far as the financial statements are concerned, management representations are concerned. Then comes to 230 audit documentation, standard point number 24. Audit documentation, nothing but the documentations maintained by the auditor and auditor team. So audit documentation refers to record of audit procedures, evidences and conclusions. So it is, auditor is going to record the 3 areas on 3 points here. So 3 important documents, 3 important information they are going to document. So number 1 is procedures they are going to document. Number 2 is evidences they are going to document, and conclusions they are going to document. So in order to make sure that they have done the audit in a quality and efficient and effective manner. Audit documentation is also called as working papers and work papers. Examination question. Audit file, then another question for exam. Audit file may be defined as 1 or more folders or a storage media in physical electronic form containing records that comprise the audit documentation for the specified engagement. So for each and every engagement, one different file to be maintained by the auditor for easy reference and easy getting of the information for the reference purpose. Then auditor has to assemble this audit file. Assemble means So collecting all the necessary documents after completion of audit and keeping in the separate file is called assembling. So assembling process should be completed within a period of 60 days from the date of audit report. Examination question. Then comes to the retention period of documentation. For how long the auditor has to keep this documentation with the auditor. Then SQC1 is answered. Examination question. Standard number 230 talks about documentation. For how many years the documents to be kept is answered by SQC1, not by 230. So 7 years, minimum 7 years the documentation should be maintained by the auditor, which is told by SQC1, not by SA 230, important for examination. Then comes to ownership of documentation. So who is the owner of the working papers? Auditor is the owner of the working papers. Again, this is answered by the SQC1, not by the standard number 230. So examination question may be twisted here and they may ask in the examination. So auditor is the owner of the audit working papers as per 230. Wrong answer. Auditor is the owner of the working papers as per SQC1, because the clarification given in SQC1. Then auditor may at his discretion make portion of or extracts of the audit documentation available to the clients. So if it is a property of the auditor, it is his will and wish to make it available to the client, provided the disclosure does not compromise in the validity of work, or in case of the independence, it should not damage. So because when I am sharing the information to another person, so it should not compromise in my independence, because independence is the base for my audit work. So I should not depend upon any other person, because users are strongly believe that auditor is independent person. I need to maintain that as per the fundamental principles of the auditing. Then comes to subsequent events. So very important for examination. So subsequent event means the events which have been occurred the date of financial statements and the date of audit report. So events occurred on the between the date of financial statements and date of audit report. But point to be noted here is the whatever the events occurred, the fact known to the auditor after the date of audit report. Auditor has already issued the report, then auditor is known that there are some events happened in the company. So these are called as subsequent events. So next comes to written representations. So written representation is always an additional information. Please note this point for examination. So standard number 580 will not give the main information always. So standard number 580 always gives the additional information. It is not a main information. So written representation is nothing but a statement given by the management which is provided to the auditor to confirm certain matters. That's all. To confirm certain matters, the management is giving the written representation, not to provide the main information here. To support other audit evidences. Already I have the evidence. In order to substantiate the evidence, I am getting the written confirmation from the management. So examination question here is, written representation is alone sufficient for audit? Means no, it is not sufficient for the audit. So written representation always only additional audit evidences. Then comes to the, although written representations provide the necessary audit evidence, examination question, they do not provide sufficient appropriate evidences. That's all. So written representation always provides only additional information but not main information. So even though it is giving the information, it does not mean that it is sufficient appropriate for the audit purpose. Then comes to 260, those charged with the governance. Very important points for examination. 260 talks about communication with the TCWG. So very what is TCWG? MCQ based question. So TCWG means an organization, persons or organizations with responsibility for overseeing the strategic direction of the company. These were the key point for exam. So whoever ensure the strategic direction, in what direction the company has to move, they are the TCWG. So examination question, they tested these particular point for MCQ based questions. And communication with the TCWG deals with 260 standard, talks about auditor's responsibility to talk with the TCWG in audit of financial statements. Please remember, when I am doing the audit of financial statements, if the auditor wish to communicate anything to the management, they have to communicate by standard number 260. Then comes to 265, communicating deficiencies, which is nothing but weakness in internal control systems. 265 applicable only in case of weakness in internal control system. See, 260 is for the anything I want to communicate with the management while doing audit. 265 is about only internal control systems weaknesses. So this difference you need to understand for examination. Then management is alone responsible for the preparation of the financial statements as per the applicable financial reporting framework, which is nothing but accounting standards plus schedule number 3. Then when I say management is responsible for preparation of financial statements, then who is not responsible? Auditor is not responsible for preparing any financial statements because I am an independent auditor. So I need to do only statutory audit of the companies. Then comes to types of opinions as per SA 700. So we have broadly two types of opinions. One is unmodified opinion, which can also called as unqualified opinion. Then clean report. Alternative names. So as per SA 700, we divided the audit opinions into two types. Unmodified, which is nothing but the financial statements are free from material misstatements. Then modified opinions, which has been clearly given in standard number 705. So modified opinions are three types. Quad. What is quad? Qualified, then disclaimer, then adverse. So we call it as a quad for shortcut. Qualified opinions, adverse opinions, disclaimer of opinion. So qualified opinion is given by the auditor when there is a misstatement in the financial statements, so which are not having much impact on the users. Come to disclaimer, very easy to remember for examination. Unable to get the evidences by the auditor, he will go for disclaimer. Adverse opinion, there are remarks which are also pervasive, which is nothing but having high impact on the users. Auditor will go for adverse opinion. Then comes to standard number 706, emphasis of matter paragraphs. So where the auditor want to get the user's attention or providing additional communication to the users, auditor is going to for 706. Then comes to SA 600. So SA 600 talks about principal auditor versus branch auditor. So principal auditor can use the work of another auditor, which is nothing but branch auditor. The principal auditor should determine how the work of the other auditor will affect the audit. So main auditor can depend upon the other auditor or not. Yes, he can depend upon the other auditor, which is nothing but a branch auditor. But main auditor has to ensure that so how the audit is going to be affected and efficiently it to be conducted. Then comes to CARO 2020. Every company, every report made by the auditor under section 143 of the Companies Act, of every company audited by him to which CARO applies for the financial year commencing on or after 1/4/2019 shall, in addition to contain the matter specified in paragraph 3 and 4, he as may be applicable, CARO report should be given. So one line summary of entire discussion. Whenever CARO applicable, auditor has to issue audit report plus CARO report. Audit report is mandatory, CARO report is wherever applicable, auditor is going to give as the additional report. Then for whom CARO is applicable? For all companies. So all company means including foreign companies. Examination question. All companies means including foreign companies. Except for the insurance companies, CARO not applicable because it is covered under IRDA. Banking companies not applicable because already in the banking companies we have LFIR, long form audit report. Charitable purpose section 8 companies, CARO not applicable. OPC companies, CARO not applicable. Then small companies, CARO not applicable. Then private companies, CARO not applicable subject to 4 conditions. Very, very important for examination. So what are the four conditions given for the private limited company? Please go through with that once. So before going for examination. Then comes to C&AG. In India, the government audit is discharged by the C&AG. What is C&AG full form? Comptroller and Auditor General of India through the agency of Indian Audit and Accounts Department. So one MCQ based question may be tested. So C&AG will be operating, or C&AG is working through the agency of Indian Audit and Accounts Department. Now please make sure that point number 44 is very important for examination. The independence of the C&AG prescribing that he shall be appointed by the President of India. MCQ based question. Who shall appoint the C&AG auditor? President of India will appoint the C&AG auditor. And who can remove the C&H auditor? So C&H auditor can be removed by voting both in the parliament, Lok Sabha and Rajya Sabha. Both the houses has to pass the resolution, but C&H auditor can be removed only in the following grounds. Proven misbehavior. Not only because of misbehavior, it has to be proved in the court of law. Then incapacity of the C&H auditor. So when these 2 points are covered in examination question, whether the misbehavior is proven or not proven, you need to check very carefully while reading the question paper. So when it is not proven, C&H auditor cannot be removed. Then in case of incapacity, C&H auditor can be removed by the Lok Sabha and Rajya Sabha. Both houses of the members has to vote in the favor of the decision of the removal, but only in case when it is proved. Then C&H auditors also can conduct the supplementary audit. One more key point for examination. They have the power to conduct the supplementary audit of the government companies. Then local fund audit wing of state government is generally in charge of the audit of municipal accounts. So MCQ based question may be tested here. So who is the in charge of audit of municipal accounts? So local fund audit wing of the state government is in charge of the audit of municipal accounts. Then limited liability partnership firms. So the MCQ based question here is Limited Liability Partnership Act 2008 is applicable here. In case of the limited liability partnerships, there is got a minimum 2 members, maximum unlimited members. In this case, the auditor has to pay the attention to the compliances by LLP as per the LLP Act 2008. What is the solvency certificate auditor should verify? Then what is the designated partners? Then capital share, capital introduced by the organization, that means partners. Then profit sharing ratios, the name of the LLP, then objects of the LLP, then rights and obligations of the partners. Everything auditor has to examine. In case of charitable institutions, hospitals and clubs or hotels, any question given in the examination regarding charitable institution or hospital or a club or a hotel, you need to make sure that you are writing one point regarding constitution. That means auditor has to ensure that the constitution of the trust has been how it has been constituted, maybe by way of Trust Act or maybe by way of Society Act or maybe by way of Companies Act, like that. Then what are the activities of the respective organizations? Example, in case of hospital, so there may be a outpatient register, there may be operation theater, there may be a medical shop, then maybe a sale of medicines, then maybe restaurant inside the hospital, like that. You remember the activities. Then comes to MultiState Cooperative Society Act 2002 applies to cooperative societies whose objects are not confined to one state. So multi-state means in different states they are going to have activities. So it is one more important question for examination. So it applies to the cooperative societies only, but the objects are not confined, not restricted to one state. The objects of the cooperative societies spread over different states, then they have to go for Multi-State Cooperative Act. Then comes to bank audit. An audit, the assets becomes non-performing assets. Non-performing asset means an asset which is ceases to generate the income. So non-performing asset means when it ceases to generate the income for the bank. That means it is a dormant account. It is not generating any income to the bank. Then RBI has stipulated the prudential norms. What norms? Prudential norms for income recognition, prudential norms for asset classification, prudential norms for provisioning purpose. 3 prudential norms RBI have been defined. Now, the prudential norms for the classification of advances, you need to remember examination. There is a standard loan, then non-performing assets. Loan means an asset. Loan or asset both are same. Standard regular means it is generating income to the bank. So income is coming to the bank. Then comes to the special mention accounts. Special mention account means it is just stopped generating income. How many days? 0 days. How many days? 0 days. Just it is giving signal. So example, I need to pay EMI on 15th. So on up to 15th the EMI is not paid by the customer. Then it is giving stress signal. Then from 1 day to, that means up to 30 days, 0 to 30 days account will be here. So till 30 days, the banker is under stress. So whether the EMI will be paid by the customer or not paid, he is doing lot of follow up. Then immediately account will move to SMA 1, special mention account 1, that means overdue by 31 to 60 days. Then once 60 days is over, the account will go to SMA 2. So this is examination question. What is SMA 0, SMA 1, SMA 2? SMA 0 means the account is slipped just into the special mention accounts. From 0 days to 30 days, we call it as SMA 0. Then 31 to 60 days, we call it as SMA 1. Then 61 days to 90 days, we call it as SMA 2. Then comes to non-performing assets are classified into 3 categories of assets for provisioning purpose. One is substandard asset, then doubtful assets, then loss assets. So in case of NPA, we are going to provide the provision. So the classification of NPA should be based on record of recovery. So you should not consider the availability of security. So there may be a security given by the borrower or net worth given by the borrower. It is not to be taken into account in case of the NPA classification. Then asset classification should be borrower wise, not the facility wise. You might be covered for the examination. Once again we are repeating for the examination because very key point for exam. Example, one borrower taken 5 loans. So out of the 5 loans, 1 loan become NPA. Automatically all loans become NPA, even though these are the good loans. They are paying EMI in time. Then comes to very important for examination, my dear friends, 5 fundamental principles of professional ethics. How many fundamental principles? 5 fundamental principles. 5 fundamental principles for the professional ethics, which is about integrity, objectivity, professional competence and due care, confidentiality, professional behavior. So point to be noted here is, so independence is not fundamental principle. Independence is not a fundamental principle. So integrity, objectivity, professional competence and due care, confidentiality, professional behavior only fundamental principles. 5 points. Then comes to independence means the judgment of the person, that means opinion of the person, which should not be subordinate to the wishes or directions of another person. Another person means management or third parties or relatives or vendors or creditors, any other person for that matter. So whenever auditor is giving his opinion, auditor has to give his own opinion. He should not depend upon any other person for the giving of the opinion. So they may be appointing authorities, whoever appointed the auditor, he should not listen them. Now auditor has to give always opinion on his own interest. So there are 2 interlinked perspectives of independence, independence of mind and independence of appearance. Very important for examination, independence of mind and independence of appearance. Then comes to 5 threats to independence concept. We have 5 threats to independence: self-interest threat, self-review threat, advocacy threat, familiarity threat, intimidation threat. Intimidation means blackmail. So management is blackmailing the auditor. If you don't give the report as for our requirement, you will be removed from the post of the auditor for next year. Like that, there may be blackmailing the auditor, that is called intimidation threat. Then comes to professional skepticism, means questioning mind of auditor, the attitude of questioning mind. So examination question may be tested here. Professional skepticism means questioning mind of the auditor. What mind? Questioning mind of the auditor. Then come to the terms of agreements. The agreed terms of audit engagement are recorded in an audit engagement letter. We call it as a AEL, which is in the writing agreement, written agreement. So examination question here is, the audit engagement letter must be in writing, it should not be oral. So who has to write this letter now? The audit engagement letter is sent by the auditor to the management. Sent by the auditor to the management. So what is the purpose of the audit engagement letter? To remove the misunderstanding. To remove the misunderstanding between the auditor and the management. The audit engagement letter will be helpful to the both the auditor and management as per standard number 210. Then consider 60th point as a part of Super 60. Very important point, 60th point, standards and quality control 1 versus standard number 220. Both deals with the quality controls only. Listen very carefully, my dear friends. SQC1 and 220 both deal with the quality controls, whereas SQC1 deal with all engagements including audits, review engagements, assurance engagements, related services. This means audit, review engagements, assurance engagements, then related services. Please understand, SCA 220 applies only to audit engagements. Very important question for examination. Question may be tested here. SQC1 standards and quality 1 is applicable to, and it is going to deal with the all engagements including audit, review, assurance, then related services. Whereas standard number 220, it deals only with the audit engagements. So these are the super 60 points for your examination, dear friends. I wish you very all the best for your examination. So we hope we given the best for you to revise all 60 points in a very speed manner and quick revision for examination. So thank you all for watching this video. So I'll try to upload this in YouTube channel also. The material might be uploaded here. You can download the material. So thank you all and my best wishes to all of you. So have a good day. Please perform your exams well. Go with the confidence to the examination. See, just listen these 60 points. You go and you can attempt MCQ based question. Write down whatever you listen in your classroom or wherever the classes you are attended. You listen that classroom lectures and classroom notes, running notes, whatever written. That is more than sufficient for your examinations. You can do well in your exam. So be confident and go with a lot of confidence to examination center. Don't afraid of anything. So please make sure that you are giving good presentation examination. Definitely will come with the flying colors. So my best wishes to all of you. So thank you all.